What's up, Trend Cloud members? Okay, let's go over this trade that I was looking at this morning on the euro dollar. This is for the TradingView competition that I'm in right now. And when you take a look at your Trend Cloud methodology and you're going through your process, you can see, now I've got the daily chart up here. You can see I've got my market edges marked off, right? This is also called the curve. So we've got this rally base drop here. Let me go back out to the daily so we can see it better right there. Okay, so we've got the demand zone or high time frame curve or market edge. Okay, those are all used synonymously. And we've just hit that. And we've got the rally base drop happening up here on the 4-hour chart. Okay, so we've got our edges marked out. Now, look at your momentum filter. It's pointing down, so that's great. And we are in a downtrend on the 1-hour chart. CCI is below -100. And oh, look at this. We're right inside of the trend cloud on that 15-minute chart, looking to make a move to the downside. Maybe we get a trend cloud momentum signal. Maybe it pulls back up to this little area right here. So we're just planning out our trade, right? And we're going to make this red. Go up here, make it red. Okay? So it could either give us a trend cloud signal and then make a move down, or it could pull back up to here into this supply zone and make a move down, because we have everything lined up for us, don't we? But what is the one thing that we've just hit that kind of makes me step back from this trade, right? Everything's lined up. Downtrend on the 4-hour chart. Momentum filter is down. Downtrend on the 1-hour chart. CCI is below -100. Downtrend on the 15-minute chart. Pulling back into the trend cloud. Now we're looking for some kind of a signal, right? That little red arrow that takes place, or it pulls back into the supply zone here. What is stopping me from taking this trade? Well, we've just hit that high time frame curve zone. And when you hit the curve zone, you basically you have two choices to make. You can either keep trading into that curve zone and just keep trading into the curve zone until everything fails, or you can leave it alone, And because we're in competition here, and that's usually what I do, when we hit a curve zone, I like to wait for some sort of reaction, and we already got that reaction, didn't we? Came down, hit the curve zone, and look what happened here. We pull back, and it doesn't make a new structure low, does it? What did we do here? We broke structure right there, didn't we? Let me open this up. Price comes down, hits that curve zone, right? That's your market edge. It pulls up, just barely reaches trend cloud and makes a move down. At this point in time, we've broken structure to the upside, okay? Meaning, here's your previous structure high. Price has broken above that and closed above that on a candle. And now we're kind of just going sideways, right? So we've broken structure to the upside, and we can now say that price action is to the upside on the 15-minute chart. So what do we have to see now in order to continue this move to the downside? Well, you can still take a chance on a trend cloud signal. Again, if it does come back up here, it's going to look like this. Here we are, right? Let's say we make another move down and then we move back up. What did we just do? Well, we broke structure right here again, okay? And then it pulls back down and maybe this time goes like this. What did we do? We broke structure there again on the 15-minute chart. So we broke structure once, twice, 3 times. It hits right here into that supply zone. We don't like that. So let me draw this out clearly in blue. We came down, we hit that curve zone, made a move up, price came back down, barely touched it, and then made another move up, breaking that first structure right there at the dotted line. So if we continue to see these little stair steps up to this area, it's going to keep feeding into that minor upward trend. What we really wanted to see was a move down and then an immediate retest of that zone. And then, okay, a move down to here, right? So we would have taken the trade right in here all the way down to that high time frame curve zone. Now we're in a different situation, okay? So we're in a different situation now. So that pattern, okay, this is all pattern recognition. That pattern is something that I want you guys to be very much aware of. When you hit the high time frame curve zone or that high time frame market edge, you've got to start looking for those small breaks of structure on your 15-minute chart or 5-minute chart, whatever your lowest time frame is. And if you start seeing breaks of structure to the upside, I think it would be best to abandon that trade. Okay? So go over this video again. Make sure you understand the concept that even though all of your indicators are lined up, you're following that trend cloud method, momentum filter is down, 1 hour trend is down, below negative 100 on CCI, and you're getting some trend cloud signals or you've hit a supply zone on that 15-minute chart. Everything looks good, but right here, you're hitting that high time frame curve zone. It's probably best that you sit back and wait, right? There's more asymmetrical leverage here, right? That's what Larry Height called asymmetrical leverage. As long as I have at least a minimum of 5 to 1, then take the trade. And I think that's a good rule to follow. Anywhere, 4 to 1, 5 to 1, then you can take the trade. But this, going from here right to there, probably not the best. Go through your methodology and you have at least a 5 to 1 target in sight. All right? That's it for now. I will see you in the next video.